This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on September 3rd, 2015. Our show is running on the long weekend. Hope you're having a great long weekend. Don't forget, if you ever miss a radio show, they are archived on Harold's two websites, HESradio.com, rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. The show goes on your portable device. We go anywhere you do. Connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com. 1-800-432-1022, 1-800-432-1022. Our featured diamond this week, it's a beautiful 0.41 carat, round, brilliant cut, VVS2 clarity, fancy gray blue argyle. And we talked about blue diamonds last week, that they're appreciating in value. And we'll talk more about this featured diamond of the week. You can see it at rarecoloreddiamonds.com. Featured diamond, click on the link. It will take you through. What a week it was. In fact, as we are taping today's show on a Thursday morning, the IMF calling for major central banks to not raise rates. And the ECB did not today. In fact, they're even talking about keeping quantitative easing going into 2016 because they continue to flirt with deflation. And that is one of the big concerns, deflation. Will the Fed raise rates in September? We will have to see. The Canadian dollar continues to be in that 75 to 76 cent range. And we are in a recession in Canada, technically 2 negative quarters of GDP, and we are in a recession here in Canada. Obviously, some of the economists believe that it will not be that severe and will not be that strong coming out, but at least there is some positive news ahead. Also, oil rallied very, very strongly, but pulled back. A top oil trader said that in 2016, he believes we will see oil trade between $40 to $60. Will OPEC come out and cut back? Time will tell if they choose to meet. Also, lots of stock market volatility around the world and the United States, obviously here in Canada with the TSX, in China, incredible volatility in China. And it was just another wild and woolly week on the stock markets of the world. Two quotes before we get to Harold's commentary that are so important. This is from Jim Reed, Deutsche Bank. One of the biggest problems we face is that there is no historical template for current global market conditions, so we're all flying blind to a large degree. Never before have so many of the most important countries in the world printed so much money and left base rates at near zero for so long. Also, never before has the largest economy in the world tried to start a slow process of reversing said extraordinary policy. There is literally no precedent in the world of human history to help guide us through markets and what we're experiencing now, that according to Jim Reed from Deutsche Bank. And when you hear that quote, it's very scary. It's very true. We are flying blind. And I think that's one of the reasons we're seeing incredible volatility in the markets. Also, Bill Gross coming out and saying global fiscal and monetary policy is not now constructive, nor growth enhancing, nor is it likely to be. If that be the case, then equity market capital gains and future returns are likely to be limited, if not downward sloping. High-quality global bond markets offer little reward relative to duration risk. Private equity and hedge-related returns cannot long prosper if global growth remains anemic. Cash, or better yet, near cash, such as 1 to 2 year corporate bonds, are my best idea of appropriate risk-reward investments. The reward is not much, but as Will Rogers once said during the Great Depression, I'm not so much concerned about the return on my money as the return of my money. That from Bill Gross. And he is with Janus Funds, used to be with PIMCO. Harold, you've been saying that for a long, long time. We're just really worried about maintaining the money that we have today.
You better believe it. And again, if we are in uncharted territory, which many think that we are, then you don't just sit there and do nothing. You take all of your risk off of the table, and that's the smart thing to do, during these extremely volatile times. You're seeing markets that are changing by astronomical amounts on a daily basis. What's happening in China is ludicrous because nobody has any faith in that market. Everybody knows that the Chinese government is putting billions of dollars a day to prop up the market. That's a manipulated market. The market is supposed to trade on its own merit, up and down. There are speculators in the market. There are people that trade the market on the upside, and there are people that trade the market on the downside. And to be restricted in a manipulated market just means that the market has no credibility. And the fact is that they'll get less and less players in the marketplace. So again, if we are in, uncharted territory and we've never seen these type of situations before, I don't necessarily agree with that. In the currency markets, I've seen these situations happen several times before. And the volatility that we're getting in the stock markets is because of speculation. The fact is that markets, you need speculators in the market and you need hedgers in the market in order for the market to balance out. And that's what's happening in the market. You've got a lot of speculators in there. That's why the Chinese stock market and the U.S. and Canadian stock markets have been so volatile over the last couple of weeks. The metals have come back down as we expected as the U.S. dollar gets stronger and stronger. As we're taping the show here on Thursday, gold's down 610 at 1228. It was just last week that the market was up at 1128. It was just last week the market was up as high as 1160. But again, as goes the U.S. dollar, as goes gold for the near term. And what we see is a very strong U.S. dollar as other countries, again, are reducing the value of their currency, just like China did over the last couple of weeks. So again, our view on the market has not changed. No matter how volatile the market gets, as long as the U.S. dollar is strong, gold is going to go lower. And the fact is that we're sitting right now in the U.S. dollar up 48 points on the day at 96.37. We've been trading in a range just below the par level between 95 and par, which is 100, which is a full dollar. So at this point here, we're sitting very strong, up 48 points on the day, 96.37. Other countries are reducing the value of their currency. And when you reduce the value of your currency, you're reducing it against the strongest currency or the reserve currency, which at this point is the U.S. dollar. So we see the U.S. dollar getting stronger, and we see other currencies getting weaker. As the commodity markets continue to weaken, watch for the Canadian dollar to continue to fall. I know a lot of analysts in Canada are believing that the Canadian dollar is close to its bottom. I don't see that at all. With China in so much trouble at this point, and China being such a major consumer of commodities, commodities are just falling at this point. Oil's falling, metals are falling, grains are falling. The fact is that almost all commodities, oil has been the most volatile of all the markets. We saw it down at $35, $36 about a week and a half ago, and went up $10 in 2 days. The fact is that oil probably has to go lower at this point due to the fact that the United States has lifted the sanctions against Iran, and Iran is going to start producing oil. Now, they're going to produce oil at a loss, there's no doubt about that, but they need money so desperately, it doesn't matter what price they sell it at. That's what the Saudis are doing. Everybody is flooding the market with oil because all these countries need money desperately. So what we're going to see is an overabundance and overproduction of oil at a time when there's a glut of it already in the market. So the prices have got to go lower. Again, if Saudi Arabia is going to live up to what they say that they're going to do, it would not surprise me to see oil come down short term to around $20 to $25. That will also, unfortunately, push the Canadian dollar lower. As commodity and oil prices go lower, that will push the Canadian dollar further. And the fact is, what I see in the currency markets is the U.S. dollar breaking par and going from anywhere to 106 to 109, which is a massive move. It's the highs that we saw in the U.S. dollar back in the 90s. And what I see is the Canadian dollar falling further because of extremely low commodity and oil prices. And I see a massive difference of maybe 40% between the U.S. and Canadian dollar. I've been hedging these markets for a long time, and I've got a hedge on against the Canadian and American dollar right now because of our diamond business and the amount of diamond business that we do in Canada. I'm Canadian myself, as all of you know. The fact is that if I didn't hedge the Canadian American dollar, we'd be in trouble at this point. But fortunately, this is my business, and I understand hedging, and I understand, what it takes to play the markets correctly. We're not risk takers here. In fact, we're very, very conservative. We don't leverage. We don't recommend leverage. We only want you to invest in the products that are going to protect the capital that you have. Capital preservation is first and foremost. Capital appreciation is after that. With everybody losing their money in the markets right now, with currency devaluations, with stock markets around the world plummeting, most people will never pull their money out of the stock market for fear that the market's going to turn around and move to the upside, or most people will never want to take a loss. But the fact is that if 2008 and 9, have shown us anything, the fact is that the stock markets can fall in half, and it can take you 6-7 years just to get back to break even again. So at this particular point, my strongest suggestion is to take your risk off the table. The fact is that the gold market is going to go lower temporarily. I feel that we should test the $1,000 level, and that should come in the fall time. September, October are very volatile months for the marketplace, mostly stock markets. Again, in September, if we do happen to see a rise in interest rates, which I highly doubt, I don't see why there's a need to raise interest rates at this point, because what it's going to do is strengthen the U.S. dollar even further, and I'm pretty positive that the U.S. government does not really want that to happen, because with a strong U.S. dollar, the opposite is happening to all the other countries. When commodities are low priced, and they're low priced in a currency, for example, in the Canadian dollar, currencies are at a bargain, and so are commodities. But the fact is that with a very strong U.S. dollar, there's nothing on sale here in the U.S. But the fact is that for the simple reason that the U.S. dollar will continue to strengthen, in actual fact get very, very strong within the very near future, it's a very smart idea to have some of your money in U.S. denominated investments. And I'm not talking stocks, I'm talking other products that we happen to handle. So if you're not doing well in the markets, if you're sitting there like a lame duck in the markets and not knowing what to do, number one, give me a call. I don't care how big or small of an investor you are. I want you to do well, and I want you to have the right information. So I will spend with you as much time as you need in order to understand what your options are. And we'll make some options and some recommendations available to you. If they're right for you and you want to go through with them, that's great. If not, you should gain a lot of knowledge by our discussions. So I'm speaking right now to about 40 to 50 clients a week that are called and concerned about how their money is invested. If you're one of them, give me a call, and I'd be more than happy to sit down with you over the phone and discuss with you what your potential options are. Again, we're in the most volatile markets that we have ever seen. I see gold going to 1,000. I see silver going to 1,250 short term. Over the long term, I see gold breaking 2,000 and going substantially higher. There's massive shortages, believe it or not, in the gold and silver market. There's record sales for gold and silver coins at a time where there's very little physical gold and silver. So there's a major difference between physical gold and silver and paper gold and silver, and I'll explain all that to you when we speak. But again, Randy, these markets are extremely volatile, very, very dangerous, and top recommendation is at this point is to get into hard assets. Physical gold, physical silver, and diamonds, the three major assets that are not manipulated in the sense of paper assets like stocks are and like paper gold is. So again, I see great things moving forward for hard assets like gold, silver, diamonds, art, classic cars, that type of thing, and I see horrific losses coming in paper assets like stocks and bonds. I just don't see a good future there.
Our featured diamond of the week from rarecoloreddiamonds.com is a .41 carat round brilliant cut VVS2 clarity fancy gray blue argyle. You can see this diamond at rarecoloreddiamonds.com. Click on featured diamond of the week. Harold has just made a very generous offer. If you'd like to speak with him personally and privately about the market chaos and where you should have some of your money shifted, connect with him, rarecoloreddiamonds.com, or call him at 1-800-432-1022. 1-800-432-1022. Harold is happy to speak to anyone that listens to our radio show. 1-800-432-1022, or connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. A couple of quotes from our free weekly newsletter that you can receive free of charge from our radio show, the companion to the show. Harold will be happy to send it out to you every week. Richard Russell saying, I'm satisfied with my recommendations to subscribers to be out of the stock market and safely in pure wealth, better known as bullion, silver, and gold. And we would add to that diamonds. I have wondered why I have lived to the tender age of 91. Of course, he's written the Dow Theory letters now for 60 years. I think my purpose is to guide my subscribers into what could be a very difficult future. He goes on to add, and with a similar sentiment, for a hopeful bull, today was a bit disappointing. I'm still very much afraid that we could be in a bear market, although we have no proof. I feel there is still a lot of fear in the market, and people are ready to dump stocks on any negative sign. From the standpoint of safety, my subscribers should be out of the market completely and in silver and gold bullion. Gold pays no dividend or interest and therefore cannot be used to generate the magic of compounding. But gold is a permanent unit of eternal wealth, unlike any other investment. If you have enough gold, then you'll always be wealthy. And we would add on, we agree that you can add diamonds into that category as well. It was an interesting note from Egon von Greyers this week. He is out of Switzerland, very, very bullish on what could be happening in the gold market. Much less than 1% of world financial assets are invested in gold today. So more than 99% of investors have no understanding of protecting wealth or insuring risk. As you know, I believe that problems in the world would lead to gold soaring hundreds of dollars this autumn and possibly even to a new all-time high above 2,000. But it will take a long time for investors to realize that they need to own gold in order to protect against the coming colossal wealth destruction. And once investors realize that they need gold, there will be a shortage of physical gold that will push the price even higher. In the end, physical gold and silver will be the only real protection against the upcoming asset implosion. And obviously, we would once again add diamonds to the mix. We believe hard assets, diamonds, gold, and silver are the key to what's happening in the world today, financially and geopolitically. Connect with Harold at rarecoloreddiamonds.com. He made a very generous offer. If you would like to speak with him as one of our radio listeners, he'll be happy to take your call at 1-800-432-1022. The call is personal and private, 1-800-432-1022. Connect with Harold at rarecoloreddiamonds.com. Our featured diamond of the week is a 0.41 carat round brilliant cut VVS2 Clarity Fancy Gray Blue Argyle. It is absolutely stunning. You can see that diamond at rarecoloreddiamonds.com. rarecoloreddiamonds.com. One of the stories that is really catching a lot of attention this week, and that is Deutsche Bank warns the aftershocks of this market. And we're talking about not only the bond market, but stock market chaos could last for weeks, maybe months. The volatility of the past 10 days was incredible and perhaps a sign of things to come. That's the conclusion of a note out Wednesday from Deutsche Bank. The note recaps the landmark moves of last week, a so-called 7 sigma move in equities, an all-time record change in the volatility of volatility, a 700-point change in the S&P 500 over the week, and 4 consecutive days of 6 sigma moves in oil. All in all, according to the note, recent trading sessions were nothing short of extraordinary. And Harold, I have to admit, I do agree with them. I think that here in September, October, we are going to be seeing incredible volatility. It's going to be a time of incredible volatility, and people should be prepared. We've already seen it this week with the stock market down 500 points and up 200, 300. It's just a time where people are very confused, and that's where you come in. You're more than happy to talk to anybody about this volatility and how we can take advantage of it to make money.
You bet, Randy. Again, the first and foremost is to eliminate the risk because, again, it's funny that most people have their money in the stock market or in mutual funds or that type of thing and think that they're balanced, that one aspect of the market, will take care of the upside and one will be more conservative on the downside. So all it does is basically put you into a hedged position where you don't make any money, and that totally eliminates the prospect of that investment. So my feeling is that when times get to be like they are right now, you're best off on the sidelines. These markets are extremely volatile. When governments get involved, like the Chinese government and the U.S. government, to try to secure their markets, whether they have a plunge protection team like they do in the U.S. or the government in China, just blatantly every day goes into the marketplace. It's almost like a pattern. The fact is, when those type of things are happening, unless you've got a tremendous propensity to risk, you should not be in those markets in any way, shape, or form. My suggestion is to sit on the sidelines. You're not going to lose anything in an extremely volatile market like that because, yes, you could make a little bit of money on the upside, but the bottom line is that you could lose a fortune on the downside. And in stocks, we've certainly seen back in 2008, 9, and 10 that there were stocks that went to zero. That will never happen with gold. That will never happen with diamonds. There are certain investment products that will protect you against these type of situations. First and foremost is protecting our money. Secondly is growing that money and making profits on it. But first and foremost is to make certain that you're in safe investments, or better still, out of the type of volatile investments where you can lose all of your money.
One of the crazy stories of the week, and it's hard to believe, in Sweden, banks are refusing, and they have negative interest rates there now, so actually you're paying them to have a bank account, are refusing to open savings accounts. Richard Landon from Helsingborg, southwest Sweden, tried to open a simple savings account at Swedbank, but the bank wanted him to move over his entire account, including his monthly salary deposits and any savings he had. They wanted it all. And we have that story in our free weekly newsletter. You can get that from Harold. Connect with Harold at rarecoloreddiamonds.com or give him a call at 1-800-432-1022. An amazing story out of Sweden. Another story, too, that was quite shocking. Illinois lottery winners are in limbo. Congratulations. You've won $25,000 in the Illinois lottery. Sorry, you're going to have to settle for an IOU for now. Winners of the Illinois lottery are being forced to wait for their money because the state lawmakers haven't passed a budget, and so lottery officials don't have legal authority to do payouts. Jackpots of at least $25,000 have been put off for the foreseeable future, and we know, we've talked about it before, Illinois really is a bankrupt state in the United States, and they have some serious issues, so here they are handing out IOUs for lottery wins. Connect with Harold Siegel in these crazy financial and geopolitical times for guidance on what to do with the money you have. Connect with him, 1-800-432-1022 or rarecoloreddiamonds.com. When you come back and talk about diamonds, as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on September the 3rd, 2015. Our time is 9:05 in the morning Mountain. A radio show runs on 6:30 CHED in the afternoon, Sundays at 3. Good luck to our Edmonton Eskimos as they play the Calgary Stampeders in the Labor Day Classic tomorrow. Rolling with Frank the Tank at quarterback, and good luck to our Eskimos tomorrow. It's a long weekend. Some of the kids went back to school last week, and all of the kids heading back on Tuesday. So good luck to the kids as they head back to school. Connect with our radio show at rarecoloreddiamonds.com. You can speak personally and privately, as Harold has generously offered in the first half of the show. If you have any questions about where you should have some of your money shifted in the current economic and geopolitical times we're in, speak with Harold personally, privately, 1-800-432-1022, 1-800-432-1022, or rarecoloreddiamonds.com. Rarecoloreddiamonds.com, our featured diamond of the week. And it is a beauty. is a .41 carat round brilliant cut VVS2 clarity fancy gray blue argyle. It is absolutely stunning. And one thing I wanted to mention, Harold, we talked about this a few months ago, the argyle tender. Now, the argyle tender the results should be coming out here fairly quickly. I'm guessing probably within the next week to 2 weeks, we will hear about the argyle tender, so we'll keep our ears up on that. But we have a stunning fancy gray blue argyle, the rarest of the rare, and really another museum quality piece from rarecoloreddiamonds.com.
Thank you, Randy. Fact is that is one of the rarest diamonds that will come out of the Argyle mine. The Argyle mine is known for their pink diamonds. They produce 95% of all the pink diamonds that are mined in the world, which is a tiny number. It's about 200 carats a year, enough to fill a champagne glass. So you're not talking about the white diamond market where they produce millions and millions and millions of carats. You're talking about the pink diamond market where the one mine that produces 95% of all the pink diamonds, you're talking about 200 carats a year. So you're talking about an extremely valuable diamond that comes out of the mine. So the Argyle mine is world famous for their pink diamonds. However, once in a while, another colored diamond will come out of the mine, and in this case, it was a blue-gray diamond. In actual fact, it's sensational. It's an oval, it's extremely rare, and it's a numbered Argyle piece, meaning that it's actually laser inscribed on the girdle of the diamond, and it's near flawless. It's one of the great investment diamonds of all time. And the fact is that the Argyle mine is getting ready to close. It's been in operation since 1986. It was one of the largest producing diamond mines in the world, producing over 30 million carats of diamonds a year. But those 30 million carats are primarily industrial white diamonds that are used in diamond bits and things like that to cut other diamonds. So they're not investment quality. What does come out of the mine are these magnificent pinks and the very, very odd time, a blue, a grayish blue, or even an Argyle yellow we've gotten the odd time. So the fact is that these diamonds are extremely, extremely valuable. They're one of the best investments you could possibly make. You know, when we talked earlier in the show about capital preservation, owning the type of assets that do not decline in value, this is an example of that. There are so few of these diamonds ever found that, again, they go up right now in value by about 15, 20, 25% a year, which outperforms almost every other investment. But the real payoff will come in 4 years when the mine closes down. So when the mine closes down, there goes 95% of all the pink diamonds. There will be no diamonds like these bluish grays or these amazing Argyle diamonds. And again, it's only 4 years away. We anticipate that the price of this particular diamond, the featured diamond of the week, this extremely rare gray blue, that diamond could easily increase by 500% over the next 5 to 10 years. So again, diamonds are a tremendous asset to own in very volatile times like we're in right now. They're not manipulated like stocks. They're not manipulated like commodities and gold and other items like that because there's so few and far between. There's so few of these diamonds available that, again, they just increase on their own merit. So there's maybe a handful of those bluish-gray diamonds ever found. We invested in them. We owned most of them. But again, you're talking a very, very tiny number. So the lucky investor that owns this week's featured diamond, I think, will make a fortune on this diamond over the next 10 years. If I had the chance to put money into a rare diamond like this one versus put money for the long term into a mutual fund or stocks, there's absolutely no way in the world that if you looked at the numbers that you would put money into an RRSP as opposed to owning a diamond for the long term. Diamonds like this never, ever go down in value. Now, not all diamonds are investment quality. In fact, most diamonds are not. But diamonds that do come from the Argyle mine, these amazing pinks and these grayish blues and these amazing yellows that odd time come out of the Argyle, these are extremely valuable. They're all laser inscribed, both on the girdle of the diamond, and it also shows up on the GIA report. Another thing, don't ever buy a diamond that is not graded by GIA, the Gemological Institute of America. You don't just buy a diamond. When you do, you get a grading report, and GIA is the most well-known and trusted in the world, and that's all that we work with. So at this particular point, with the Chinese stock market as volatile as the market could possibly get. They've actually devalued their currency twice in 1 week. You've seen U.S. stock markets and Canadian stock markets open up and plummeting right from the word go. You've seen commodity prices drop. You're seeing things in the marketplace that, again, are so ridiculous and so dangerous for an investor. And if you don't know what you're doing, the chances are very, very good that you're going to lose a large amount of money if you keep your money in paper assets right now. The fact is that gold and silver should go a little bit lower just due to the reasons that I gave you earlier in the show, which is simply the strength of the U.S. dollar. It's got nothing to do with the fundamentals for gold and silver. For the long term are extremely bullish. Short term, I see those markets falling. It's important to own gold and silver in these type of markets because it's a hedge against everything bad that could possibly happen in the market. But diamonds do that also, and especially rare colored diamonds that are of extremely high quality. So the diamonds that we recommend that will not only protect your capital and give you an opportunity to sell these diamonds in another currency which is stronger than the currency that you're in, but the fact is they're amazing investments. Yellow flawless diamonds, 1 carat yellow flawless diamonds for around $20,000, they increase by 15% a year. 15% a year. In 10 years, you'll do way better than double your money. Actually, you'll come close to tripling your money. There are no investments today in stocks or bonds or anything like that where you can even come close to doubling your money anymore without taking a gigantic risk. So again, yellow flawless diamonds, fancy intense yellows, fancy vivid yellows. It's almost impossible to get fancy vivid yellow flawless diamonds, which are the highest saturated diamonds color-wise. The prices are going through the roof. They're amazing assets to own. And again, during these extremely volatile times where, again, most people in those paper asset markets will lose their money, that does not happen in the diamond market. It's only going to get better and better because there's so few mines available in the world today. And with the Argyle mine going to close in less than 5 years, we've got a tremendous opportunity to make a fortune in these markets. I truthfully have never been more excited than what's happening in the diamond market today, especially with the volatility that's showing up in other markets. So the diamonds that we recommend, yellow flawless diamonds in the $20,000 range for starters. The vivids go up into the $100,000 range, depending on the size and again, clarity. All of ours are internally flawless, and all of ours are from South Africa, the highest quality yellow flawless diamonds. Then we have our Argyle pinks. We're the largest dealer of Argyle pinks, and the reason for that is that I invested in them very, very heavily for myself and for my business, which means my clients. All of my Canadian clients, by the way, and just to show you how important the currency markets are, all of my clients that have bought diamonds over the last 10 years when the Canadian and American dollar were pretty well even are up over 30% on the diamond just because of the currency. Put aside how much the diamond has gone up in value, just because the U.S. dollar has strengthened and the Canadian dollar has weakened, this is a perfect example of how currency devaluation can affect you but work for you in the diamond market. Where my Canadian clients are seeing their currency fall and fall, their investment in diamond is rising and rising and rising because of the currency markets. And then you add to it how much the diamond has actually increased in value, you're looking at one of the best returns on investment available in the world today. Now, let's face it, diamonds are not for everybody. If you look at the United States, 75% of the population doesn't have $10,000 to their name. Our diamonds start in the $15,000 to $20,000 range for investments and go up to as high as $40 to $50 million. The majority of my clients invest in diamonds under $250,000, with many of my clients buying diamonds in the $20,000 to $50,000 range because, again, you're much better off owning a diamond like that than owning a stock. You'll make way more money, and you'll have a lot less grief and aggravation. You'll sleep at night not worrying about, if you're going to wake up in the morning and see the price of your stock plummeting. That will never, ever happen in the diamond market. I've given these and put these type of assets aside for my grandchildren. Got 4 young grandchildren. Obviously, as a very proud grandfather, I want to see my grandkids do extremely well. They do not own any stocks, no bonds, no mutual funds. The only thing that are put away in their safety deposit boxes for the future are diamonds. And I can assure you that my grandchildren, when they're 28 and 30 years old and ready to get started in this world, will have an asset that they can sell and get started with, where you cannot say that with stocks or bonds or any other product. So again, Randy, at this point, with the world in chaos and the markets in chaos, the one bright spot that is not volatile but doing extremely well is rare colored diamonds.
Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. Speak with Harold personally and privately, 1-800-432-1022, 1-800-432-1022. See our featured diamond of the week at rarecoloreddiamonds.com. It's a .41 carat, round, brilliant cut, VVS2 clarity, fancy gray blue argyle. And we will definitely be on the lookout for the new stories about the argyle mine that are going to be coming out here in the next at least 2 to 3 weeks when the argyle tender does wrap up for 2015. One of the stories we have in our free weekly newsletter you can receive free of charge via Herald, and obviously we'll be happy to send it out to you. Sotheby's sets October Hong Kong sale of magnificent jewels and watches. And one of the items that's on sale October the 7th is a 41.65 carat, internally flawless, fancy, vivid yellow diamond. And they're saying an estimate on it is around $2 million. For those that might have missed our last show, we had, and this was very good news, blue diamonds drive color index higher in Q2. The fancy color diamond index rose in the second quarter, driven mainly by the blue diamond categories. According to the Fancy Color Research Foundation, fancy color diamonds continue to outperform, showing price strength amid a backdrop of declines in their white counterparts during the second quarter. Based on a survey of more than 20 wholesale traders analyzed by the FCRF and reviewed by the accounting firm Citrin Cooperman, the index revealed prices of fancy colored diamonds across the pink, yellow, and blue categories increased 1% over April to July. Now, the strongest performers included 1 carat fancy blue and 1 carat fancy yellow, both up 4% each. Fancy vivid blue in the 3 to 10 carat range jumped 4 to 6%, and a significant advance of 5 to 6% was noted in 10 carat pinks, both intense and vivid. In most categories, the increase in prices was because of lower supplies. And one of the things that they go on to say in this story is that as time continues, it's going to be even harder to find rare colored diamonds due to diminishing production by miners. And Harold, that story was, I wanted to repeat it from last week for those that might have missed it, outstanding news for those that have invested in diamonds, because not only are we gaining on the currency, but we're obviously getting the capital appreciation on the diamonds as well, and that according to the Fancy Colored Diamond Index.
You bet. I think it's an excellent idea, and it's obviously giving people information that they need to make an intelligent decision, but it also shows, again, in a very short period of time, in a very volatile world market, how diamonds are faring against other investments, and they're outperforming them tremendously. So, again, I'm very pleased with the fact that we're in this investment, but by far the best is yet to come. The more volatile the world gets, the better this investment will do. And the fact is that, again, when you look at your overall performance of assets, you've got to take a look at and say that you're going to go with what's going to give you the biggest return on your investment with the least amount of risk, and that has to be diamonds. I'm not saying put all of your money into it. That would not be a smart thing to do. The fact is that you want to be diversified, but you do want to have something put away for the longer term. And the longer you can hold on to these diamonds, the more and more they go up. It's a tremendous thing. I've mentioned this many times, but there's thousands and thousands of stories of how diamonds have increased in value. I've always talked about my wife's girlfriend recently who inherited a 5-carat pink diamond from her grandmother. Her grandmother bought it 50 years ago for $50,000, and today the diamond is valued at $5 million. We bought some Argyle pink diamonds, one of the larger ones that came out of 2-carat vivid pink, back in 2003, and now you're talking that diamond has gone from 350,000 to almost 4 million. So again, the longer you hold on to these assets, the more and more they go up. I would put them away for retirement. If you're in your 30s, 40s, and 50s, put away a diamond or two in your safety deposit box. It will well outperform any stocks that you have at this time.
Our featured diamond of the week from rarecoloreddiamonds.com, a .41 carat round brilliant cut VVS2 Clarity Fancy Gray Blue Argyle. And here in the next few weeks, we should know about the Argyle tender, and we will pass it on to you. And that will come via our radio show and our newsletter. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com. 1-800-432-1022. 1-800-432-1022. One of the great things about diamonds, when you invest in a colored diamond, you really have something you can hold in your hand. Not some piece of paper or computerized record thereof. You've got something you can hold in your hand. As we've said before, the quote was from Rick Rule from Sprott USA, invest in things governments cannot print. Not some crazy hedge fund that, as we saw when the Swiss franc was taken off the euro peg, that lost all its money, $900 million down the drain. Not a crazy hedge fund. And the other thing is that when you talk about diamonds, you have a permanence and invulnerability, and no car collector or no art masterpiece can promise that. Diamonds are going to be here for the long term. And unlike a stock certificate, bond, or T-bill, this is an investment you can hold in your hand. Diamonds can be mounted, displayed, and appreciated, obviously, on fingers, wrists, ears, or necks of a loved one that you choose. And as we always joke, Harold, you don't go into a party with a stock certificate on your finger. What we recommend is the rarest of the rare, museum-quality, rare-colored diamonds from rarecoloreddiamonds.com. And we have a perfect investment diamond, a .41 carat round brilliant cut VVS2 Clarity Fancy Gray Blue Argyle. And I know the people that have invested in these diamonds in the past have simply been blown away when they received them and saw them for the first time and held them in their hands.
It's amazing, Randy. It's one of the most beautiful assets you could ever lay your eyes on. And again, not all diamonds are large diamonds that sell for fortunes at auctions. In actual fact, we know that the Hancock Red was bought back in 1950 for $20,000 and eventually sold for over $3 million. So again, it's a very unique asset in the sense that there's very few, extremely rare diamonds in the world today, and there's becoming fewer and fewer as more mines, end their reign type of thing, and they're not finding any new diamond mines. And even if they did find a new mine, it could take 10 or 20 years for that diamond mine to get back online type of thing. So we're very comfortable with the diamond market at this point. Supplies are low, demand is high, and that's a tremendous recipe for extremely high prices in diamonds. And add to it the volatility and the risk in all the other markets, it makes certain diamonds a very attractive investment at this time.
If you would like to read the stories that Harold and I are on a weekly basis, be on the same page we are, connect with Harold at rarecoloreddiamonds.com, 1-800-432-1022. Get your name on the list for our free weekly newsletter. It's the companion to our radio show. You can go through it in 5 minutes or spend hours. It's really up to you. But you're going to see all the info that we're talking about from mainstream sources. As well, you'll have a look at our featured diamond of the week, a .41 carat round brilliant cut VVS2 Clarity Fancy Gray Blue Argyle. And you can find out more by going to rarecoloreddiamonds.com or speaking with Harold at 1-800-432-1022. I think it bears repeating. In the very beginning of our show, we had two top quotes, and I think for those that might have missed it, we'll repeat it because it's so important. This is from Jim Reed of Deutsche Bank. One of the biggest problems we are facing is there is no historical template for current global market conditions. So we're all flying blind to a large degree. Never before have so many of the most important countries in the world printed so much money and left base rates at near zero for so long. Also, never before has the largest economy in the world tried to start a slow process of reversing said extraordinary policy. There is literally no precedent in the whole of human history to help guide markets through what we're experiencing right now. That is from Jim Reed of Deutsche Bank, a major quote that came out this week, and it's so true. We're flying blind to a large degree. We do not know how this is all going to work out. That's why we've been advocating for quite some time. You need to have an insurance policy in your portfolio, diamonds, gold, and silver. Also, Bill Gross from Janus Funds, he used to be with PIMCO, coming out saying global fiscal and monetary policy is not now constructive nor growth enhancing, nor is it likely to be. If that be the case, then equity market capital gains and future returns are likely to be limited, if not downward sloping. High-quality global bond markets offer little reward relative to duration risk. Private equity and hedge-related returns cannot long prosper if global growth remains anemic. Cash, or better yet, near cash, such as 1 to 2 year corporate bonds, are my best idea for appropriate risk-reward investments. The reward is not much, but, as Will Rogers once said during the Great Depression, I'm not so much concerned about the return on my money as the return of my money. And Harold, we have talked about that for many years on our show. Really, we're in a time where there is massive manipulation. We're in uncharted territory. We're flying blind, and you really need an insurance policy in your portfolio to protect yourself, as we're seeing here in the last month with the volatility in the stock market. And we have about 3 minutes left.
Well, again, you're 100% right, Randy. The fact is that we do need a lot of protection, and the fact is that, you got to take this extremely seriously. If you're watching the markets and reading the news and understanding what's going on, there's more risk in the market today than probably any other time in our history. And if we're in uncharted territory and we haven't seen, a lot of these situations before, and let's face it, the debt level alone and the derivatives market could wreak havoc further on these markets. If we don't know what's happening, or if we're uncomfortable with what's happening, the smart thing to do is to take a step back, take the risk out of the market. That's the first thing you do in these type of scenarios. You don't leave yourself vulnerable to the marketplace, because you're going to wake up very soon and see this market plummet, and you're not going to get a chance to get out, just like the people that are in the Chinese market. So the smart thing to do is to evaluate your situation, and I'm willing to help you with that. Again, there's no charge for this. If you want help with what you're doing, you need some advice, I'm here to help you. These are extremely volatile times. I've seen a lot of these scenarios before, but I know what I do in these situations. And again, I get very, very conservative. I do not take risks, and I do not speculate in markets that I'm not comfortable with.
Our featured diamond of the week from rarecoloreddiamonds.com. Go to rarecoloreddiamonds.com right now. Click on Featured Diamond of the Week. You will see a .41 carat round brilliant cut VVS2 Clarity Fancy Gray Blue Argyle. These diamonds are very, very rare when you're talking about fancy gray blue. And when you first hear gray blue, you might think, gee, I don't know if that color goes together. Take a look at the diamond. Go to rarecoloreddiamonds.com and you will see an amalgamation of two colors together that are absolutely stunning. Unbelievably gorgeous. And speak with Harold personally, privately, 1-800-432-1022 about investing in that diamond, or connect with him at rarecoloreddiamonds.com. Thank you for your knowledge for another great show, Harold, and hope everyone has a great long weekend.
You bet, Randy. I wish everybody a wonderful long weekend, well-deserved, I'm sure, and a very profitable day.
And we say to the kids, be safe as you head back to school on Tuesday, and for those that are already there, good luck. Also, good luck to our Edmonton Eskimos as they play the Calgary Stampeders. That's it. Another edition of the World Financial Report on Radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.